Hello, this is the Chart Profit video. Approaching 90 minutes into the trading day, Friday 6th of October. I'm going to look at the currencies first this week. This is the pound dollar chart. I showed last week 5-minute distribution. At that point the minor point of control was at 134.91, as you can see. This graphic from last week's video, and I said in the short term I wouldn't want to initiate any new longs below this level, 134.91. I then said that this dotted line here represents a level I believe may attract time, 134 dead, and I said I would want to see the pound back above this level before assuming higher. Actually, over time 134 did attract precisely that level, enough time to migrate this minor point of control down to that level at this point here, and as soon as that happened the pound dollar chart moved lower pretty swiftly. Currently the daily chart looks like this. Support level is here, 129.95. That's the 9-month point of control. We've now dipped back below this halfway point from the Brexit high to the October last year low. That's the blue dashed line here. As we know, that was previously resistance, and then when we broke above it, the pound moved quickly higher, but we have retraced that. We're now in the opposite position where we've broken back below that halfway point, and we're heading down currently towards that support, 129.95. Just want to make the point on this daily chart I am showing the Bollinger Bands here, and just want to let you know these are not the standard 20 period Bollinger Bands. I actually use a 40 period Bollinger Band. You can see them here on the Euro FX chart as well. In fact, that's just reached that lower Bollinger here, and off the low earlier in the year I've just marked these swings which show a series of higher highs and higher lows. As you can see marked there, the most recent low on that chart is here. We haven't quite broken below that level. I did say previously that if that happened it would mark a break of this pattern of higher lows. Could well happen, we haven't seen that yet. We look here at the dollar yen chart. The two levels that we've been monitoring recently are 111.30, which is 2-year point of control. We are currently printing above that in a strong price location. I've also marked the halfway point off this high to this low, which is this dotted line here, and that has been resistance. Today, briefly, chart printed above that level following the jobs data, but currently back underneath that point. As I've been saying for a while, price printing time above there would be a further positive, but we seem to be having a little problem at the moment with that level. Here we have the dollar index itself. The major point of control at 95.50 here would now be significant resistance if reached. We have hit the up on Bollinger Band today. Last time we did that was back over here. Bullish point on the chart currently is the fact that we've seen time now here printed above the 8-month at 93.46. Time back underneath that level would put the chart back in a weak price location. Back in the pre-open, just reviewing the E-mini S&P, said back pre-open on the 31st of August, over a month ago, that the minor 3-month value area higher at 24.5750 and price acceptance at this higher level would suggest that another distribution up has begun. Certainly looked like that over the last month, and just over the last 6 or 7 days the E-mini has moved strongly higher in a kind of day frame trend up. You can see the minor points of control, each daily controlling price. I've extended them with these dotted red lines, and you can see that the following value areas each day has not breached or come close to breaching these dotted lines. So that's a good definition of a minor uptrend, and we've seen this and talked about this before. First very minor indication of a change in trend would be that pattern breaking down. That may be useful, especially since the next clear support level is down at 25.03, which is the 1 month controlling price. As I've mentioned today, pre-open significant selling, or red, has not been marked on the profile for 32 days, and within that period aggressive buying, that's these green points at the top here, that's been marked 6 times. The market has come higher, obviously, so this is effective buying. We talked on or I wrote on the 2nd of October that the E-mini had reached a target which had set at 20 within the mid 2520s. That was discussed back on the 21st of September, and I said that distributions suggest that the E-mini may reach at least a temporary exhaustion here, which would be an indication of a fast rejection, so we'd be talking about this kind of level here. But I also said that turning that on its head, price acceptance at this higher level would be bullish. Equivalent level on the spider actually came in somewhere between, and this is long-term targets, between 253, 254, and we have actually just exceeded that, but on this chart at least we're within the ballpark of that target. Just means there's some indication that we're in the tail of these distributions, and if that was to play out and we saw rejection here, you'd see a pretty fast rejection signified by pretty sharp move lower. We don't see any sign of that just yet. The pulse chart looks pretty healthy. We've got the breadth in the middle here, which is solidly green. As we've already talked about, you can see all the green on the bars here, showing the significant aggressive buying from the E-mini, so that's all good. And at the bottom here, the price momentum is above 0. That's trend up. The only negative or potential negative is the divergence between price, which has gone to a higher high at that point, and the momentum indicator, which has gone potentially to a lower high. Now that would only become significant if this daily price momentum indicator were to turn down again. That would trigger possibly consolidation or a stalling point on the chart. It's a struggle to find any clear negatives. First thing we'd look for would be something like this, the red bar indicating aggressive selling on the E-mini. Looking at the sentiment, my version of the Ridex assets ratio, actually yesterday was sharply higher, up to 11.4. That's from 8.73, quite a sharp move higher, and up from Monday's ratio, which was recorded at 6.96. That was an 8-month low. And as I wrote at that point, this, as the market is making new highs, in the short term at least, this is not normally bearish. So here's the chart. Currently the ratio at 11.4. You can see it's up quite strongly from this multi-month low down here. At that point the market, true contrarian fashion, started moving really swiftly higher. This level over here that was reached in August above 15 is the highest in the database. Any move in the ratio above that level, i.e. responding to the breakout and the market moving higher, any move above that for the ratio would probably indicate that enthusiasm was running a little too high again. I did talk about this last week. This is the bear fund assets in isolation. You can see this dotted line here representing the previous high point for bear fund assets this year. I said last week that if we saw that exceeded, we'd have a minor sort of contrarian signal higher, and that's exactly what we've seen. And since then, those bear fund assets have started to fall pretty quickly. In the public poll from AAII, the bulls percent was higher this week at 35.6%. Bears percent was also higher at 32.8%. It's worth noting that the 4-week moving average of net bulls minus bears, that's the black line here, has just reached its highest level in 8 months. Investors intelligence poll, that's the newsletter writers. Bulls percent was higher this week, bears percent almost unchanged. At this point 3 weeks ago, respondents to the poll got very bearish at that point. Bulls percent was the lowest since November 2016, 3 weeks ago, and bears percent was at its highest since December. And we saw the 4-week moving average of bulls minus bears down here in black reach a multi-month low. Newsletter writers at that point very wrong. in the short term at least, as the markets come pretty quickly higher. This 4-week moving average is now picking up, and although buy signals, contrarian buy signals, are much more reliable than sell indications with these sentiment indicators, if we saw this top level here when the indicator peaked earlier in the year, if the market continues ahead like this and we see them getting very enthusiastic like this, again that would be a marker of real over-enthusiasm. Another sentiment indicator which has a much better record of picking bottoms than tops from a contrarian point of view. The Lipper US fund flows, I look at the 4-week flow data, this black line here, much more reliable when we see really bearish readings, severe high outflows. Not really seeing anything at the moment of use, but again this week Lipper US fund flows reported equity funds including ETF outflows of a negative $1 billion in the week to the 27th. Apologies, that should read the 4th of October. What I can tell you for sure is in the last 15 weeks there have been only 2 net inflows in that data, and in the data that excludes ETF flows, in the last 15 weeks we have seen a net outflow registered every week. We talked about this indicator relative to other indicators and the fact that the data indicates mutual fund investors, this data anyway, remain very cautious. This is the UK's FTSE 100 index, large cap. The level that we've been following is 74.13, which is the 18-month, and the FTSE, helped somewhat by recent weakness in the pound, has seen a very strong rally back above that level, so it puts this chart back in a strong price location here currently. German DAX also back above its 8-month here and actually managing a new high at this point. T-bonds, we're looking at TLT, the T-bond ETF. Again, I have the 40-period Bollinger Bands shown on the chart in blue. Off the low earlier in the year, we've seen a series of higher highs, higher lows. TLT falls below this low here, about 122.50. It would break that series of higher lows, put that pattern in doubt. And today we've briefly tested, and right now we're printing back above that level. This is the 9-month controlling price support at 123.40. This would be a good level, obvious support for TLT to start picking up again if it's going to maintain this pattern of uptrend. Price back below 123.40 at this point would put the chart in a weaker position and suggest a test of the major down here at 119. Interestingly, GLD, the gold ETF, has tested its major today at 119.84. Has bounced back a little, price back below 119.84, again puts this chart back in a weak price location. And here's the 40-period Bollinger Bands I've just added in there. Here's USO, the oil fund ETF, has in fact today moved into a weaker position below its major controlling price at 10.14 and below its halfway point off this major low to this high. So we need to see USO recover these levels before assuming higher for this chart. And that chart in fact brings us to the end of this video. So once again, I wish you a good weekend and thank you for watching.